Welcome back. We're talking about Fortress Paper right now.
Yeah, our guest, Chad Wasilenkov, is trying to reinvent the forest products industry in that there's no point turning out commodity pulp and paper and lumber. He reckons to make real money, you got to go specialty.
Value added. Really
Value added.
Yeah.
So over in Europe, he's making the new breed of wallpaper, much easier to take down.
Yeah.
He's also producing high quality paper for currencies, banknotes.
Security paper, right. Security notes. And yeah, they make euros amongst others as well.
And then, but the big growth, they hope, is going to be in, it's the blue area there on your pie chart, it's going to be in this fast-dissolving pulp, which can be turned into rayon, a substitute for cotton.
Yeah.
He's converting, or been converting, a mill in Quebec, but it's taken a lot longer and it's cost more than investors had hoped. Let's have a look at the stock. The shares have been under pressure. They're down 39% in the past year. There's the intraday.
Now, the company also reporting earnings, which is part of the reason we're taking a specific look at Fortress Paper today. And company, in terms of the segments, if I'm not mistaken, they're actually only making money right now in the, and I'm pausing here to take a look here, in the wallpaper side of things. The security paper notes as well as the dissolving pulp that we talked about are not turning a profit right now, and that's been a real concern. This pulp operation you're talking about has been this big turnaround story. They've invested a lot to really ramp up and get commercial production going.
Right, so let's get over to the man himself, Chad Wasilenkov, CEO of Fortress Paper. Chad, it's great to see you.
Thanks for having me.
You got to, just today, the market really seems unhappy with these results. Why is that?
We've had some delays at our Thurso production. This is the mill we bought in Quebec about 2 years ago. We went through a major conversion at that mill to take it from a high-cost commodity paper pulp producer to a very specialized dissolving pulp producer, which will be used in the rayon industry. Once completed, which was done at the end of December last year, we now make a much higher margin, more profitable type of product, and we'll be in a very low-cost position globally. So that project is about 3 months behind schedule, and now the ramp-up is coming along very nicely, but probably another 2 months before at full production, where we can really prove up the cost structure that we are globally competitive. Internally, though, we have no concerns that we're not going to hit those targets, so it's just a matter of time.
Now, tell us why, just for people who don't know about the Thurso project, the dissolving pulp. It's used to make rayon. Rayon is a substitute for cotton. And I was taking a look back at cotton prices when you were getting involved with the operations. Cotton was really almost near, I think it was a 3 or 4 year high. It's come down quite a bit. So how has that affected the price for the dissolving pulp?
Dissolving pulp does track the cotton price, so when cotton did take off there a couple of years ago, the underlying dissolving pulp that we're making also spiked. It went to between $2,600 and $2,700 a ton. Currently it's trading around $1,100 a ton, and that is around our long-term forecast. There's quite a bit of new capacity come online, but a lot of that's come online in China, and the cost structure for most of that is probably in the $1,200 to $1,300 a ton. So several of those mills that have been converted are sitting idle or shut down, or they've swung back to paper pulp where they can at least try to generate a profit. So it creates a nice floor in the market in and around these prices of $1,100, and our cost structure will be much lower than that. So even at $1,100, we'll make very attractive margins.
Now, the Quebec government desperately wants this mill reopened, and they have agreed to pay quite a bit of the cost. But there have been big cost overruns. The idea of the financial hit that Fortress Paper will have to take.
Yes, our original budget was in the $153 million range, and total project's going to come in just over $200 million. Part of that is due to some delays, some long lead time, very expensive piece of equipment were delayed getting on site. We also had a strike in Quebec. It was not mill-specific or company-specific, but a province-wide strike, which again caused us to incur some costs. And now the ramp-up is occurring a little bit slower than expected, and so there is a financial burden associated with that. Again, it's, from our point of view, it's just a timing issue. Everything remains on track, just a few months behind schedule.
Chad, on that, and things being behind schedule, I mean, it's all about cash flow, obviously, and what's a good time or what's a good idea when. I know some analysts that I were talking to said that I think at the end of this quarter, you've got a net debt position when you were in a net cash position 1 year ago, and said you're going to need to raise money, maybe even having to sell the wallpaper unit, which is the only one making money right now. Is any of this going to come to fruition?
Yeah, the reason our debt position has increased, obviously the expenditures have occurred at our Thurso mill, where we put in about $130 million of additional debt as we went through the construction project. And again, those debt levels will begin to come down as Thurso is ramped up and we get positive cash flow from that. When we look at our wallpaper division, it is doing spectacularly well. Every single month it has a new record profit performance. Margins are widening. We do expect that to continue throughout the year, but we do run our overall company as a portfolio. So we do look at all our particular assets, our particular investments in companies, and we try to time the market as well to see when the best time to potentially exit or crystallize on a particular asset. Again, when we bought that mill, it was doing in and around $1 million per year in profit. Now it's generating over $1 million a month. So again, it's doing fabulously well for us, and we expect that to continue. So we're not in any hurry to sell it, but if the opportunity presented itself, we would look at it.
So tell us, if you buy into Fortress Paper right now, you're buying what you reckon is a very undervalued asset in Quebec. Because, I mean, obviously Quebec Rayon is going to be the big growth story for the company from now on.
Yes, and I think it's important for people to know that we still are a growth story, and we're very, very rigid in our investment criteria. Acquisition we recently announced, we're just in the final processes of closing it, is a good example. We're buying a mill up in northern Quebec. The replacement cost in that mill would arguably be about $1 billion. We're buying it for $1. With that, we're putting in another $222 million into capital expenditure. But based on today's commodity prices, that mill will generate in excess of $100 million per year in profit. So we're getting very attractive entry points, and we hope to replicate that and continue to grow this company, both in dissolving pulp, but in other ancillary businesses. Again, as long as they have strong barriers to entry, niche products, we are trying to avoid commodities at all costs, and again, good growth profiles in what we want to grow in.
Chad, you mentioned that when we were talking about the wallpaper side, it's a possibility that you look at, when the value is there to sell assets off, that might be on the table. But also the security paper segment, you're saying you're assessing strategic options for this segment, including the sales of non-core assets. I mean, what does that mean?
Yes, at our banknote division in Switzerland, we had one large order coming in at the end of last year. It represented 50% or approximately 50% of our annual production. The government then put it on hold as it had to go through some bureaucratic checks and a few more overviews and oversight committees. We have not lost the contract. It's just in delay. Making banknotes is very unique, though. It's, again, because we're not a commodity product, we can't just turn the machine on and start making banknotes and wait for an order to come, whereas you could do that with paper pulp or other commodities. So we have to wait for another banknote order to come in. It can take 6 months to get that order. By the time we get the order, all the raw materials that are specific to each banknote. So that led to the first half of this year with idled capacity while we fill the machine. We expect this large order to come back online at the end of this year, and we've been taking in new orders, and actually we have a potential problem of too many orders to fill the machine in the last half of the year, so we will have to work on our production schedules and things like that. In terms of selling non-core assets, we did just recently sell for 18 million Swiss francs a hydroelectric facility. It was producing part of our own power at the mill, but the total cost structure change will be 400,000 Swiss francs per year at an 18 million sales price. We just felt, again, we viewed it as an asset that it was an attractive time to sell it. We do have other non-core assets we intend to sell at our Swiss facility. We own quite a bit of farmland in the surrounding area, so absolutely non-core, non-essential for our operations. We're just looking to change the zoning for it to further increase or enhance the value and raise capital that way. We are always looking for opportunities like that to unlock shareholder value, to continue on our growth profile. And again, we have to fund that growth in one form or another.
Chad, we've got to leave it there. Thank you so much for joining us.
Thank you.
Chad Wasylenko is CEO of Fortress Paper.
I appreciate the fact that he's basically saying all options are on the table.
Yeah.
If we need to sell assets to make this work, the only danger I know is that, will they be selling the asset that's making money to fund the one that's not?
Yeah.
I mean, it depends on your take on where that dissolving pulp goes.
But he's super flexible. I mean, he came late in his career to the pulp and to the forest
and he
industry.
built this company. He really stitched a lot together.
That's right. So we got some fresh thinking there. Trying to go into interesting niche markets where it's hard to get into. Right. Competitors will find it hard. All
right, coming up, we're going to update you on the markets with Mark Bunting. We'll tell you which Canadian REITs are reporting after the bell.